Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indexes, take a quick look at a couple of volatility ETFs, ETNs, and then we're going to look at the 10-year and 30-year, and then also at Bitcoin. So yeah, so first up, let's look at the Spider S&P 500 ETF, SPY, and so this was the bullish close that the bulls were looking for. So yeah, you know, the market is full of head fakes, and it was looking like that this was going to pull back, but as you could see here, it busted through 50, and you have RSI at 54, and then Fasto busted back above 80, so now it's in the bull zone, you know, and SPY likes to get cooking when it gets up above 80, so it needs to stay above that level. And then the really bullish development was the close above the 50-day simple moving average and above the middle Bollinger Band. So in the last video I showed how all of these wicks on these candles here were all pulling back from the middle Bollinger Band, and to me it was looking like it was topping out. I mean, maybe they were pulling it back to load. You know, I must have read the tape wrong. To me, it was looking like it was hitting resistance here, and that it was maybe going to pull back and test this 100-day simple moving average. It had to hold EMAs 4 and 8. Those support levels did hold, and the bullish development that we were looking for was a close above these two key levels, the middle Bollinger Band, which is the 20-day simple moving average, and above the 50-day simple moving average. And so that happened today, and so that triggered the bull flag. So that's awesome. That's great to see. We're super stoked on the close. Much better than having a big pullback, a big red candle, and then seeing the markets pull back. Just surprised that it happened on a Friday. It did also happen on light volume. So notice how volume was very light. So it did break above resistance, above the high close resistance. Now it has to break above the recent highs. That would signal that it wants to head higher. You can see it closed right at Tuesday's high, and then if it can get you know, a week ago's the high from that Friday, if it can close above that level, that'd be a clear signal that it wants to push higher. So what you want to see now is the middle Bollinger Band at 272.27, and that 50-day simple moving average at 272.47. Basically stay above 272.50, and that would signal that a new uptrend is starting. So that's what it's looking like, that a new uptrend could begin here after that big bounce. It got through resistance, and many times that close above resistance does signal that it wants to head higher, but it has to hold support. If you check out middle or the MACD down here, it did get the bullish crossover on the 12, 26, and 9, so that's another signal that a possible new uptrend is starting. If you look at the Dow Jones Industrial Average, notice how it finally closed above 50 on RSI. It had tested that level last week but failed to get above. It finally got above. You know, notice that it also, you know, it's been on this uptrend, right? And then the same thing with Fasto. You know, it had been pushing higher, and then finally it got above 80 on Fasto. And as you could see over here, you know, the Dow Jones Industrial Average gets moving higher when it gets above 80. It's good for it to be above 80. Look at the uptrend. It was above 80 the entire time. It's another signal that the bulls are strong. You know, the market is full of head fakes right now. The hedge funds are back, and so it's making it tough to read. Once you think you have the pattern figured out, they're going to change another, you know, they're going to flip the script and start a new pattern. And that's why you have to be really fluid like water, and be ready to adapt to whatever, you know, whatever the market is giving you. And right now it's saying that the Dow Jones Industrial Average wants to head higher. This is the bullish close above the middle Bollinger Band, the dotted purple line above the 50-day simple moving average. As long as it stays above 25230, 25,230, that's going to signal more upside potential. You know, if those two levels turn into support, it could get a new uptrend going. If it pulls back below, then that'll signal that it was just a head fake. Once again, I think it's going to be all about breaking the recent highs and getting a close above the recent high. Now it closed above the key moving averages. Now if it can close above the recent high, I think that would be a clear signal. Okay, it really does want to get heading higher. And so what we're looking for now after a new downtrend started on the break below the middle Bollinger Band is for support to hold and a new uptrend to begin. Now it needs to get above this level here. It looks like 24,450 is going to be the big level. If you see it close above that level, that's going to be signaling it wants to head higher. Notice once again, it was the lowest volume in a very, very long time. So, you know, it was on a Friday, but if you look right here, I mean, you have to go way back here to December to find the last time that there was this light of volume. So it was just interesting that it was able to push through resistance on you know, I mean, this is close to average volume, but it was lighter than any of the previous days since back in December, and it was on on a Friday. So those are just all very interesting. And so you have a bullish crossover here on the MACD 12, 26, and 9. And so notice the histogram is now above. So it's signaling it's heating up. You want to see that MACD line stay above the signal line. Okay, let's look at the NASDAQ. So ticker symbol COMPQ. And so it had been the strongest, right? So it had already been above 50 on RSI. Now it's back above 80 on Fasto. It is temporarily overbought at 99, but it's just showing that it closed at it closed at high of day. And notice how the last trade of the day was there's no upper wick on the candle, and so that's extreme bullishness. That's just signals that the bulls were strong all the way until the last trade. And so yeah, it was a very strong close. Notice that it did close right at the key resistance level once again. That high close, it closed exactly at that level, right? So it has to close above, and that should be the signal it wants to head higher. The NASDAQ has been leading the way, so the other ticker symbols, will be looking, or the other, the other ticker symbols, the other indices, we'll be looking for them to follow. Notice how the NASDAQ was able to close above that middle Bollinger Band, all right? So 2 weeks ago, and then it had turned it into support, and now it's pushing higher. The Dow Jones Industrial Average just finally closed above. So for it in comparison, it's like NASDAQ way back here on the 15th of February, and the same thing with SPY. It just finally got above the middle Bollinger Band, but the NASDAQ the NASDAQ was already above, and now it's pushing higher. It looks like it wants to get that new uptrend going after sitting there and turning it into support. All we wanted to see is that dotted purple line hold, and it did. So this is great. This is good news, everybody. As long as support holds, it could retrace back up to that 7,500 level. Back up to that recent high. It's going to be all about staying above EMA 4, that pink line. Notice how once it got above that level, it's been holding the whole time. So you have a close above EMA 4 right here on the 12th after bouncing down here, and notice how all of these candles have been above that level. So a real easy way to gauge whether or not this run is staying strong or cooling down will be whether or not this level holds. It's currently at 7259, and so as long as it keeps closing above that level, that's your signal. Yes, the uptrend is still strong and intact. And once it closes below, that will just be a clue that, hey, this is cooling down. It might take a breather. Okay, let's look at IWM. This is the Russell 2000 ETF, and so once again, it closed back above the 50 level for RSI. It's at 53. This is its highest level in quite a while. As you can see here, it hadn't been at this level since back here in January, and so yeah, it's really heating up. And now you have same thing with Fasto. You have to go back in January, the last time it was this hot, and so it made the bullish move again above resistance. Notice that it has to get back above that high close once again. So it closed above the middle Bollinger Band and the 50-day simple moving average. It had already been above the middle Bollinger Band. So no, actually it had closed below on Thursday, and then it had a gap up open on Friday, and then it ended up closing above resistance. And so for all these stocks that just closed above that 50-day simple moving average, since it's the closest moving average for the indices here, that they need to stay above that level. So it's going to be 153.83. If you see it close back below, that's going to be a signal that it's still resistance. Notice how all these candles failed to close above. Many times when a level gets hit multiple times and then there's finally a close above, that's the signal it wants to head higher. And but as we know, there's been a lot of head fakes and a lot of deception, and so it's going to be you have to see that the charts follow through. But typically that's what happens. You have 4 tests in a row and then finally closed above. That's a signal that it should push higher on Monday. That's what the charts are signaling. But they could give us a head fake, but they're signaling they want to head higher. And then above this 154.75 level, this high, if it can close above that, if you see it above 155, IWM, that'll signal that it wants to push higher. Once again, the thing that is a little bit concerning is just the light volume. Closed above resistance, but look how it was one of the lightest volume days. It does have a declining volume pattern, and so notice how the volume has been getting lighter. So what you're looking for now is for a bullish volume spike. You want to see some people come in and make a commitment that yeah, they're taking this higher. You want to see, if you're a bull, you want to see a bullish volume spike that push through temporary resistance, a close above 155. What you don't want to see is a big red volume spike and then a close below support, and then that would be a red flag. For all these indices, they need to close above, turn that resistance level that they just got above into support. Okay, let's look at SPXL. This is the S&P bull 3 times, and so now it's back above 50 on RSI. It's at 52, so that's a big move as well. It had broken below, and so now it's a signal that it's heating up. It closed above the 50-day simple moving average as well, and above the middle Bollinger Band, and so that's a big move. It closed high of day at 47, and so now if it can stay above those levels, that should signal that it wants to head higher. Once again, it's that high close, or the high intraday, the recent high level that it needs to break above. I think if it can close above that get above 47.50, that'll be a signal that this uptrend is starting and that it wants to push higher. So keep an eye on SPXL. This is the Drixon daily S&P bull 3 times, and then now take a look at Bitcoin. So a lot of people are putting a correlation between the markets and Bitcoin, and so I'm not sure which one, if you can put that correlation together or not. But Bitcoin pulled back, and then the markets followed Bitcoin, and then Bitcoin bounced, and then the markets bounced, and then Bitcoin pulled back, and so Bitcoin's pulling back here. Okay, so after the markets bounced. Right, so they came up, bounced, and then they had a little mini pullback as well. So this bounced and this is having a little mini pullback. The whole thing with Bitcoin, if people are following and trying to put the correlation together, it's going to be all about keeping this uptrend intact. Okay, so that's the middle Bollinger Band currently at 95.72, and so if you see that turn into resistance, if it drops below, I currently have it lined up here. It's basically if it stays above 94.50, that's going to be a signal this uptrend is still intact. If it drops below that middle Bollinger Band, and currently 95.72, that's going to be a red flag. It's currently a red flag already that it closed below EMA 4 here on the 21st, and then you have all these candles in a row that are below the pink, and basically it's turned EMAs 4, 8, and 13 into resistance. Now you have a very small candle. This is a huge day for Bitcoin. It's either going to bounce here, or it's either going to break through resistance or break through support. It's at what we call a flex point here. EMA 4 is the descending resistance line, and the middle Bollinger Band, which is the 20-day simple moving average, is that ascending support line, and one of those two levels are going to break. If you get a close below the ascending support line, that's going to signal downside risk, and you're looking at a drop to that 200-day simple moving average currently at 8634. And then if you get a close above EMA 8 at 9934, that could signal a breakout higher. So I think if we see Bitcoin breaking down, that's not going to be good for the markets. For people that are putting that correlation together, if we see Bitcoin bounce here and keep the uptrend going, then that should be positive for the markets. At least that's what correlation some people are putting together. So keep an eye on it. We'll just see how that plays out. I'm not putting, I'm not convinced either way. I'm just saying it is an interesting thing to keep an eye on. Let's look at SVXY here. Okay, so we're looking at the ProShares short VIX short-term futures ETF. So this is shorting the VIX. Okay, this is shorting volatility. This is betting that volatility is going down, right? And so this was that big trade for like XIV, right? Everybody was in it forever, and then this got punished just like XIV, but it still trades because it trades options, and so it's still trading. And so the bullish development here was it finally closed above EMA 4. Finally, on Friday, it closed above EMA 4 at 1271. It had been working on that. Notice how all these candles here, all these candles are hitting the pink line without closing above. Finally, on Friday, there was a close above. So right now, SVXY is in play with a tight stop at that 1271. You have to have a mental stop at that level. If it closes back below that level, that signals it's no longer in play. It's only in play here if it stays above the pink line. It has to be support. If it turns into resistance, that just signals that you want to be short or sidelines. It's been in a sideways channel here. You can see this channel pretty clearly. Let's see if we can tighten it up a little bit. But yeah, the big thing is going to be the close above resistance, which it did have on Friday. And so yeah, you notice how all these candles are inside this sideways channel here, and then this was the high close on this candle, and so it closed above that. It closed above EMA4. It's signaling more upside potential tonight. The VIX is up in futures trading, and so this is a tough trade right here. Just keep an eye on it. This is interesting though if it can stay above EMA4, and then check out UVXY. Okay, so this is the ProShares Ultra VIX short-term futures ETF, and it trades options as well. And so the big thing with this is it got totally pummeled. So I'm sorry everybody that got crushed on this one. It's tough when you're playing that middle Bollinger Band. It's a fine line. It could either be a great entry point because it's the bottom of the uptrending channel, or it's the top of the downtrending channel. So it's right there. We have to be ready to exit right away. What happened on Friday is everybody that loaded on Thursday here on this move, there was a gap down open, and so people that loaded near in the 17, anywhere above 1650 basically was underwater right at the start of the day, and so that created more people that ended up selling, put more pressure on UVXY. Notice this gap was unfilled. I posted the daily charts, and I can't remember. I think I did show this 15-minute chart, but I don't know if I showed the triple top, and so I wish I would have. Yeah, it was showing here that UVXY, formed a top here on the 20th. It came down, formed a bottom with another top. So it formed this double top, and then it pulled back, and it hit a triple top right at that 200-day simple moving average. So that was a red flag, and that was signaling, it's risky to hold into the close with the triple top and hitting a key resistance level. It was still above the middle Bollinger Band, but it was testing that level, and it was above the 1500 simple moving averages. But it was just it was confirming that it was a very tough resistance level. And so yeah, I wish I would have put more emphasis on that in hindsight, looking back, seeing this triple top. Now it did come down and it failed to hold the double bottom level intraday. We were looking for a possible bounce off of 1575. That was the low from the 21st, but it just broke right through that. When the markets broke out, it was right there. The interesting thing is that for the last between 11 and 12 Pacific Standard Time during the trading day, that's usually the opposite of what happens earlier in the day. So if stocks are up earlier in the day, then usually between 11 and 12 the bears attack, and then if stocks are down, usually between 11 and 12 Pacific Standard Time, the bulls get a little rally. It's usually that hour before power hour that a lot of times the contrarians get a chance to trade. That's been a pattern for a very long time, and today, that pattern did not play out on Friday. There was upside all day for the markets, and into 11 o'clock they were up, and then a lot of times if they're up during that 11 to 12 o'clock, there's pressure after 12. That's been the pattern, and that didn't happen. So basically just the bulls just kept pushing the whole day, and that just drove this down. And so it came down and it actually closed below the February 16th low, and so it broke these both key support levels on the chart, and so now it's below 15, and so that's going to be a really big level to get back above for UVXY. So keep an eye on 15 on the chart. What has to happen on this 15-minute chart, notice how they drove it down the entire day. All of these candles are below EMA4. They didn't let it close above EMA4 the entire day. I mean, it doesn't get any stronger of a pullback, and so once it closes above, which is right at that $15 level, that's going to be your signal. Okay, yeah, they're starting to bounce UVXY. Okay, so there's also a correlation, with the 10-year U.S. Treasury and with the way the markets have been trading, and so a lot of people are putting, obviously there's huge emphasis on rising yield here, and so what we have is the daily chart, and so what this is showing is a 3-month chart of the 10-year, and it shows how it topped out here at that 294. And then it pulled back, and then there was a close below EMA's 4 and 8 on Friday, and notice how it closed below that line since all the way, for the first time since all the way back here. The last time it broke below was back here at the last week of December, and it ran all the way down to the middle Bollinger Band. And so right now, if this line turns into resistance, if it stays below 288, then you're looking at a potential pullback down to EMA 13 at 286, and below 286 would be the middle Bollinger Band at 282.5. So basically, the point I'm trying to say is that this is pulling back for the first time. This is the biggest pullback since way back here. And so if people were trying to put a correlation between this, rising recently, getting close to 3, and that putting downward pressure on the markets, I'm not sure how closely you can correlate that. But if it is, and this is pulling back, then that could be bullish for the markets. If this drops down to 282, wouldn't that mean that the markets could get a rally going and keep going? It seems like this really steep drop was this really steep drop here was a big it was directly reflecting how bullish the markets were into the close. The markets were pushing really hard, and this dropped really hard on Friday. And so if you look here at the 10-year Treasury yield on the weekly chart, you can see here that each candle here represents 1 week of trading, and so you can see here that it closed with a doji this last week, and this is a gravestone doji, and when a doji forms at the top, I noticed it formed a dragonfly doji here, and it kept moving higher. So I don't know how much you can put correlations between the candlesticks and the 10-year. I admit I have not charted them very often, but I'm doing that with the correlation with the indices here and what's going on in the markets. And so I just find this interesting that it formed the doji here, so that's signaling a potential pullback. And so this is kind of correlating with the daily chart, and what it's saying is that it could drop down to EMA 4, down to 282.9, which also puts it at that 282 middle Bollinger Band. So we'll see if it cools off a little bit. If you notice here, EMA 4 has been holding the entire year so far, and so this has just been pushing the entire year. And so if it ever gets below that EMA 4, that would be a signal it's cooling down. Now if it gets above 3, that's when everybody's saying that it could be a big red flag. If you look at the 30-year here, this is the 30-year Treasury yield. You can see a similar pattern where it came down. This is the daily chart, and it closed below EMA 4, just below that level, or I guess right at that level on Friday, but it closed below EMA 4, but right at EMA 8, I'm sorry, at 316. And so it's right at that line. The last time it's been at this level was back in January. And so it noticed the steep drop. It has that where it spikes up and it pulls back, but this is a multi-day pullback, and it was very steep on Friday. If we see it dropping down below 316, that's going to be a big signal that it's cooling down. Now if you see it break above 322, I think that would put more pressure on the markets. So the 30-year above 322 would signal possible pressure on equities, and then a drop below 316 that should be bullish for stocks, if I'm reading everything correctly. And so don't hold me to it. This is just my own personal opinion, and I could be wrong. And so here's the 30-year U.S. Treasury yield weekly chart, and as you can see here, it's coming up, and the weekly chart shows a multiple top here at this 320 resistance zone. So notice back here in 2016, it came up and it hit this level, came back down in 2017 and hit it, formed a double top and had a big pullback. And so right now it broke out above all the moving averages. It's on a very strong uptrend, riding EMA 4 support higher, but it formed an inverted hammer, which is a shooting star pattern. And so, but it had a red candle before it. So this wouldn't be a classic pattern setup, but when you get an inverted hammer at the top of an uptrend, that is a signal of a possible top. And so we could be looking at a triple top at this level. This could be a level where after this huge run that bond traders are looking at locking in some gains, because it's been a multiple resistance level. Now if you see it above 320 for the week, closing above that level for the week, that's going to be super bullish for this chart. And then obviously I think that would be negative for US equity. equities, right? If I'm reading that correctly. And then here's the U.S. Treasury 30-year bond price, and so I thought this was equally, a little interesting as well. If you look at the USB 30-year Treasury bond price, you can see here that it's dropped dramatically. Okay, and so now it formed a hammer as well, and so it formed a hammer during a downtrend, and it's hitting key support levels from 2014. Notice there's this gap. There was a gap up in 2014 down at about 141, just above 140. I mean, I don't know how often treasuries fill gaps, but it looks like this is the gaps filling. You can see there were some gaps over here, and it came down and filled the gaps. Maybe this is a gap fill play. It filled the gap here, and then it pulled back. So yeah, there was a gap here. They pulled back and filled the gap. So maybe it's coming back. It's going to fill this gap down here at 140, 141, and then it's going to get a bounce. Basically, if you see the Treasury bond, the weekly bond above that, this is the weekly chart. If you see the weekly chart with the close above 143, 144, that EMA 4 level, that's going to be your signal. It's ready to head higher. And then just to check this out, this is TNX. Okay, ticker symbol TNX. This is the 10-year U.S. Treasury yield index, and then you could see here that it had two red candles in a row. It had formed a bearish Haremy cross reversal pattern, and so it had a sell signal on Friday. It had confirmation of the reversal pattern on Friday. So you could call this bearish Haremy cross, or you could even call it bearish Haremy. I'd probably call it Haremy. I don't think that's quite a doji. But the bottom line is it formed a bearish reversal pattern on Thursday, and the pattern was confirmed on Friday with the gap down open. Notice that it's hitting EMA 13 for the first time since way back here. Last time it closed down at these levels, where it broke below EMA's 4 and 8, it came down and it tested the middle Bollinger Band. If that happens again, then you're looking at 28, 26 is the big level. It has to stay above the middle Bollinger Band to keep the uptrend going. If it drops below, a new downtrend could begin. Now, if you look at TYX, this is the CBOE 30-year U.S. Treasury yield index, you could see the same thing. It had a bearish reversal pattern, bearish descending hawk, and then it had a sell signal on Friday because the pattern was confirmed, and then you could see here's the pattern. And so yeah, this is because it's there was a white candle inside of it's an open red candle here inside of the white candle, and so basically this is just another signal that this is cooling down. It had a very strong run. If it's hitting EMA 4, that's the key support level at 3162. If that holds, then the uptrend is still very intact. If it drops below that level, then you're looking at EMA 13 at 3135, and then it has to hold this 31 level, the middle Bollinger Band at 3092. That's the level to keep the upturn going. If you see it break out above 32, this 3220 level, that's going to be your big signal that it's breaking out higher and more pressure on the markets. Okay, yeah, so we have the bounce in the markets and the pullback here. I don't know how much of a correlation you can make between the two, but I just find it interesting. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check us out in our chat. I'll post the link below the video. Thank you.